So what's going to happen in the market in 2023? So I've been doing my own research. You can ask my wife. I'm up at night. I'm looking at different papers, videos, articles, things on the internet. And I have my own opinions and conclusions, but I just got back from the other day, went to the SABOR, San Antonio Board of Realtors 2023 forecast meeting. And there they had some speakers there and some economists of people sharing their insight and the data that they're seeing. And what was cool was like 95% of the information that they were saying is in alignment with what I've discovered. And so I said, you know what, if that's the case, then let me not just share that with our team internally, let me also share that with the public. And so let's get into it. I believe I got like 10 main points I want to share with you in regards to the outlook for 2023. And so just for those of you who don't know, my name is Adam Oduwumi. I'm the founder and CEO of Uprise Real Estate Partners. We're here in the Texas area, here to help to serve you guys and help you reach your goals and make sure you know all of your options so you can make the best decisions for you and your family from buying, selling, and investing as well. So let's jump into it. Number one, there is a thinking that we are going to have the recession begin second or third quarter of this year. Now, some of us who've been paying a little bit more attention, we could say, man, that recession, we had a little bit of a recession already in 2022, or it's already started. Yes, but in terms of like the government saying it, the news saying it every night, like the official recession, second quarter or third quarter of this year. So that's what they're anticipating there. The second point is that they're expecting the Fed to start, instead of raising the rates, to start lowering the rates, not until 2024. 2024 is when they think the Fed will start lowering the Fed rate. And you have to remember that in 2022, we had the fastest raising of the rates in the shortest amount of time, I believe, in the history of America. And so just because you rip the Band-Aid off doesn't mean you want us going out there running around like a chicken with our head cut off again, because the demand is still there. We're still short supply, right? We're still short of the demand that people have from a renter standpoint, from a new construction standpoint, from just a housing standpoint, right? So as soon as there's cheap money again, it's going to be another repeat, maybe not as high, but it's going to be a strong repeat of 2021, beginning 2022. In my opinion, the government's going to want things to cool off a little bit, right? Like go home for a little bit, like stop, like go home for a little bit, calm down, and let's get the economy back to a pace that they're comfortable with before things shoot back up again. And so, so they're saying Fed probably won't lower rates until into 2024, until they get the inflation rate, or how they consider the inflation rate, down to 2 to 3%. I think it just came out the other day. We're a little bit below 6 now, so we'll see. Third point is commercial assets. So the commercial assets, they believe they're going to continue to do well through this recession and through 2023 are going to be multifamily, industrial, and A-class office space. So multifamily, simply because, again, if it's hard, if the demand for housing has slowed down, that means more people need to rent. And if more people need to rent, they need places to stay. And so multifamily is going to do very strong, do very well. Now, for those looking to purchase multifamily, the only downside is that before it was so hard to get multifamily. Until we start seeing distressed type properties more coming to the market, that's probably not going to be alleviated. Okay. Next is number 4 is from distressed property standpoint. So they're believing that we should see more, and again, this is on the national level, not like local level, right? But on the national level, they're believing that we should see more distressed properties around Q3 and 4 of this year. I was telling people a couple months ago that I believe that from an investment standpoint, there'll be more opportunities after July. The Fed will keep doing their thing until next summer, and then there'll be some opportunities after the second half of this year now, right? And so they're pretty much saying the same thing. Now, I'm going to talk about this later in terms of sometimes you don't want to go buy an iPhone when they tell you everybody come buy an iPhone tomorrow. right? Sometimes you want to be able to get an iPhone before the masses know about it. Sometimes you don't want to go flip a home when they say this is a great time to flip a home. You're too late, right? You want to buy a good flip home before the masses get there. Same thing with stocks. If they say Amazon stock's on sale right now, right? You're already too late if it's on the news, because as soon as the news announces it, that price is gonna. I'm giving you guys some good content. That price is gonna shoot up. You wanted to buy Amazon stock last week before the news even knew about it, because you could just gobble it all up at the lowest price you could get it at. So when they say there's gonna be opportunities from an investment standpoint, anticipation of third and fourth quarter of next quarter, don't wait till the fourth quarter of next year to try to start buying properties. What you want to do is you want to start preparing now in the first quarter. You want to start looking in the second quarter and start buying things, because I'm telling you, there's going to be opportunities out there if you know how and you know where to look, if you're working with a good team. All right, next. There was discussions about what are some things that are going to need to happen to get momentum back into the economy, get momentum back into the housing market. And there's a couple of things they mentioned. Number one, improving inflation. Inflation has to get improved. If inflation doesn't go down, the Fed's going to keep raising rates, right? So the faster inflation goes down, the faster we can get to a point where the Fed's not looking to be so aggressive when it comes to raising rates. Next, obviously the Fed changing their strategy and pivoting, right? And so there's two main things they're looking at. They're looking at the interest, they're looking at the inflation rate, and they're looking at unemployment. And it's crazy to say, but that's what they're looking. They're looking for inflation to go down, and they're looking for more people to not have jobs to go spend money. I know, they're looking for the unemployment rate to go up. It is what it is. Next, a recession. If we go into recession, then hey, it's hard to be in a recession long term and also have inflation. And so if we're in a recession, if they're forcing us into a recession, then inflation, it's almost like taking a box that's on fire and just throwing it in water and be like, all right, cool. You could just let the box sit there, and if there's nothing flammable around it, just let the fire die out. But the quickest way to do it is just go throw in the bathtub, just go throw in the river, just go throw in the lake, just throw in some water and let it cool off. And pretty much that's what they be doing, or what they are doing, leading us into a recession. Next is sellers and buyers giving more and more incentives. If you're a seller and you're just dropping the price a little bit from what prices were in 2022, that's not enough unless you're in a high demand area. Overall, that's not enough to make buyers jump up and go, ooh, okay, I'll buy that right now. No, buyers before in the 2020, 2021, and beginning 2022 had the thought of fear of missing out. The money's so cheap. I have equity in my house. Let me sell my house and go buy another house. There was a lot of that fear of missing out before it's too late. Now what a lot of buyers are thinking are fear of buying at the top. So buyers don't want to so-called buy a bad deal. They don't want to buy your house and then it goes down in value $50,000 and they're like, well, that sucks, right? So they don't want to feel like they're buying a bad deal. So the way to make buyers feel like they're getting a good deal is offering incentives, and the next point is bigger cuts, lowering the price of your home, bigger price cuts. And so that's what we're advising our sellers to do and to consider as well if they're ready to move on the ladder and move on to the next stage. If they got all the time in the world, okay, we can talk about that, right? If they're ready to move on to the next stage and move on to the next home or the next area they want to move in, then these are things we have to consider, right? So that's pretty much it. So the next point, or the sixth point, main point, is we were talking about where did most of the buyers come from, from around end of 2020 all the way to this past year. Where did most of the buyers come from? And you probably already guessed it, California, right? But check this out. The top 3 places out of all the cities in the United States: LA, Seattle, and the Bay Area, right? Fully, blown West Coast, right? And so here's what you need to understand. Listen to this 7th point. They asked a lot of renters, they said, okay, when you going to be ready to buy again? And they said, we're going to be ready to buy. We want to buy now. They said, we want to buy now. We're just waiting for prices to come down. Guys, for those of you in Texas, when they say they're just waiting for prices to come down, understand it's still the LA buyers, it's still the Seattle buyers, it's still the Bay Area buyers. So again, just like I was talking about earlier with the investors, if you wait too long, I'm not talking about making a dumb decision. Don't misunderstand what I'm saying. But I'm saying if you don't have a strategy and you're just waiting for the news to tell you when it's the right time to buy, you're going to be competing with the buyers in LA again, with the buyers in Seattle again, with the buyers in California and the Bay Area again. Don't do that. They're halfway across the country. They're not going to know when it's the right time to buy again. So make sure you understand your situation. Make sure you understand how to get a good deal over the next from now into the next 6 months. Get a good deal now so that when they're announcing that there's good deals again in Texas, you're not having to pay $20,000, $50,000, $100,000, no appraisals, on your offers again. Okay, be mindful of this. Number 8, more sellers are going to be considering to remodel their homes. So they were talking about how some sellers who are in good interest rates, like bought their homes in the last, because what we saw was since 2018, before 2018, it used to be that your average homeowner was in their home for 5 to 7 years. Well, then that changed because all the equity that came after COVID. So then it was like 3 to 5 years people would sell their home. So what's going to happen now is I believe we're going to go back to that. We're going to go back to like a 5 year, 7 year period of people staying in their homes because they like their payment, they like their interest rate, and they want to maximize the amount of time they can stay there before they need to upgrade, before they need to get a bigger house, before they need to get a job that relocates them, things of that nature. So more sellers are going to be looking to renovate their home because they know they're going to stay there longer than maybe they initially thought they were, right? And so if you know anybody that needs renovation services, contractor services, project management services, or just wants consultation services to help them with ideas and managing their renovation in their home, reach out to us. We have a project management division, and we have contractors we can refer to you guys as well. Okay, number 9, 33% of buyers want to buy within the next 1 to 3 years. 33% of buyers want to buy within the next 1 to 3 years. And going back to point number 7, they're literally just waiting for a couple things. They're waiting for prices to come down. They're waiting to see what's going on with interest rates. They're just waiting. They had the shock. Everyone had the shock last year. The interest rates were going up. And so they just want to wait till things, the shock factor goes away, and then they'll start buying again, right? And that's it, guys. And so going back to my last point, and something I just kept reiterating on some of the other points, is do not wait until the news tells you something. Guys, I made money in stocks. I don't look to the news to tell me that Amazon stock is a good deal. I don't wait for Google to tell me if Alibaba or what's some other ones, Boeing or whatever, right? Like, I'm not looking for the news to tell me when it's the right time to buy stock. If you are, then, is novice the right word? You're someone that you're always coming too late, right? And you're not going to make the real money. The real money is with the ones that study, the ones that do their research, the ones that have teams that study and do the research. So if you ain't got time, if you got a job, if you got kids, you got a family, you got other things you're working on, your health, all that kind of stuff, utilize people like ourselves. You don't have to use us, but utilize people like ourselves. They're trusted advisors. We focus on relationships, long-term relationships, rather than just being transactional, because we focus on helping you understand what your vision is, know where you're currently at, and then help you build strategic plans and game plans to help you execute and get what you want and realize the vision that you have. So if there's anything we could do to help, let us know. Our network is very vast. So if there's anything you're looking to do, buying, selling, or investing anywhere in the country, reach out to us. We'll connect you with other trusted advisors that are in our network. So other than that, guys, thank you so much. We appreciate you guys. Love you. Take care.